signs of economic recovery fueled by the country's biggest ever budget of over 300 billion ringgit. Is the worst really behind us? I'm Muhammad Ahmad Hamdan and this is Money Matters. Welcome and thanks for joining us on TV3's flagship business program, Money Matters. We're joined by Finance Ministry's National Budget Office Director, Datuk Johan Mahmud Merican. Welcome to the show, Datuk.
Thank you for having me, Mohammed.
Right. Now, after almost 2 years of economic slump due to the COVID-19 pandemic, there are now signs of recovery. This, coupled with the country's biggest ever budget of over 300 billion ringgit. Do you think the worst is behind us now? And what is your outlook for next year?
Well, that's certainly the case. We definitely think that the worst is behind us. And let me give you a little bit of context in terms of how we formulated Budget 2022 and what the background to it was.
Sure.
When we were preparing Budget 2021, a year ago, at that time, actually, we thought then it would be a recovery year. And in that scenario, we had forecast that the 2021 economy would grow between 6.5% to 7.5%. Unfortunately, COVID had other ideas, and certainly with a new wave, Delta, we were required to then lock down. And certainly, most recently, our revised estimate for 2021 is a growth of between 3% to 4%. On top of that, what we're seeing is unemployment. It's still at a relatively high rate of 4.5%. A bit lower than its peak of 5.3% of May 2020, but certainly 1 percentage point more than what it would normally be pre-crisis.
Right.
And on top of that, our colleagues in the Ministry of Entrepreneurial Development have estimated that close to 37,000 SMEs have gone out of business as a result of the COVID crisis. But that's perhaps the worst is behind us.
Right.
The darkest time has passed, and certainly there's light at the end of the tunnel.
In that context, the worst is behind us.
What certainly has helped is the government's focus on the immunisation program. We now have more than 95% of our adult population has been fully vaccinated.
Right.
That has then contributed towards the fall in cases, and also, more importantly, also a reduction in the capacity of our ICUs. And that's enabled the country, under the National Recovery Plan, to open gradually and safely in stages based on data. And based on that data, we've then been able to open up and transition almost all states to phase 4 of the National Recovery Plan. There only remains 2 more states, Sarawak and Kelantan, which we are confident would also transition to phase 4 by the end of the year as a prelude towards then transitioning to what we call the endemic phase. Given that, that provides a great platform for 2022 to grow strongly. We forecast that for 2022, a growth of between 5.5% to 6.5%. But we're not just satisfied with a growth measured by GDP. I think what's also very important is to ensure that it's a recovery not just in terms of GDP, but a job recovery and income recovery. And with that, we target that unemployment, we would want to bring it down to 4% or lower. And in terms of also ensuring that businesses also recover in tandem with that job recovery. So in Budget 2022, we speak about the 3 Rs, recovery, resilience and reform. Recovery is the main piece where, again, 2022 is our focus for recovery. We want to ensure that there's no more lockdowns. We remain, it's an open economy. Our businesses can restart again, hence the GDP forecast of 5.5% to 6.5%, the recovery in jobs and also businesses thriving again. But we also then have a focus on resilience. We want to ensure that we're also well prepared in event of any future crisis or even any future spikes in for example, even COVID. We're well prepared by, for example, investing in national resilience, strengthening our health system. We also want to ensure that our social protection systems are also strengthened, because during the crisis we saw that those in the informal sector or self-employed, or those perhaps not well covered by our SOCSO or EPF. We also want to make sure that also the financial strength of our business sector is also there to ensure that they're able to reap the benefits of the recovery. And last of the 3 Rs is reform. We want to ensure that in the longer run, we also have a sustainable fiscal management of the country. In line with the 12th Malaysia Plan, we also want to ensure that there's inclusive development to ensure that the gaps between the less developed and more developed parts of the country are also mitigated and reduced.
Right.
And also, last but certainly not least, in terms of reform, to start on this agenda to be more sustainable. And I think Prime Minister has mentioned, wanting to be a net carbon zero emission economy by 2050 with incentives for electric cars, and these are some initial steps towards the longer term for the country.
It's a lot of work for sure. But following up on my previous question, many are asking if the government can actually or has the capacity to finance this budget. Do we have to borrow? And what about our future generations? Will they be saddled with debts? How do you think this will affect our economic fundamentals?
I think what's important, Muhammad, is to recognise that we're in this transition stage. We're just coming out of the COVID crisis and entering into what should be our recovery. And the government wants to ensure that the recovery of the nation is on firm footing. And therefore, as what YB, Minister of Finance, has also mentioned, we want to ensure that the government does not prematurely withdraw fiscal support. And therefore, what you can see is that whilst the deficit this year is projected to be relatively high at 6.5%, we do not intend to consolidate it too quickly. We're managing it so that the deficit is slightly reduced to 6.0%. So still a relatively high deficit, showing that the government is maintaining its expansionary fiscal stance as part of ensuring that government is there to continue to support the growth momentum. In terms of debt, yes, a high deficit certainly then contributes to debt. We will be entering the 1 trillion club. At least our government debt will exceed 1 trillion next year. And also of more concern is our debt service charges. This year they would reach about 17.6%. That means that for every 1 ringgit of revenues, we'll be paying almost 18 cents worth of just interest charges, and that's not even talking about repayment of principal. But in that context, this is not a sustainable level. So what you then have to recognize is that, yes, the government wants to ensure that we're there to support both in terms of livelihoods of people and business continuity this year during the crisis and next year as part of initiating the recovery. But in the medium to long term, we then have to consolidate and undertake fiscal reform. And what we've had in the 12 Malaysia plan is a target that we will try to reduce the deficit to between 3 to 3.5% by 2025.
I thought just very quickly before we go to the commercial break. Now, one of the key focuses of the 2022 budget are small and medium enterprises, or SMEs. For example, the 14.2 billion ringgit worth of funds available for SMEs under the Central Bank's Targeted Relief and Recovery Facility. Do you think this is enough to get SMEs back on their feet?
Now, actually, the Semarak Niaga, or the approach for business, is actually a 40 billion package. And what the government is then doing is to target it at different segments in terms of the financial system and different segments in terms of companies. What I mean by that is that the 14 billion is what the government directly will be injecting through loans, whether directly from Bank Negara, about 11 billion, and balance basically coming from our development finance institutions like Bank of Pembangunan, BSN, Agrobank, and the like. But there's an additional 20 billion, more than 20 billion, that's also going to be provided through guarantees provided by the government to commercial banks, because we also want the commercial banks to also be ready to lend. And I think what often happens is that, especially coming out of a crisis, many companies have used up their reserves,
cash flow problems,
and they don't look the most creditworthy. And so, to encourage banks to lend to these SMEs, that's where the government guarantee comes in. And this includes providing guarantee on existing loan facilities which have been restructured to enable then these banks to feel comfortable to then provide fresh working capital. Because I think as the economy reopens, we want SMEs to be in a position to be able to reap the opportunities of a reopened economy and have access to working capital. And for the smaller SMEs or micro SMEs, we're also providing microcredit of 1.8 billion, which even includes terms like 6 months, 0% interest rate, 6 months moratorium. We want to give enough breathing space for companies to get back on their feet. The government is even supplementing it with SMEs not having to pay their tax installments for 6 months. So it's all about, we're really focused on recovery. We're providing that fiscal support. We're providing the guarantees to help companies get their loans, and providing that time for them to really bring space for them to really kickstart and jumpstart their businesses.
Okay, we've got to go for a quick commercial break right now. We'll be talking about the prosperity tax, or Cukai Makmur. That and more when we return after this break. Welcome back, and you're still with us on Money Matters as we speak with Dato' Johan Mahmud Merican of the Finance Ministry. Now, Dato', a key concern of the corporate community was the Cukai Makmur, or the prosperity tax, announced in the 2022 budget. There are fears that this will drive away investors, particularly foreign investors. What are your comments on this?
You know, earlier we talked about the deficit, and whilst the government's willing to continue an expansionary fiscal stance and still have a relatively high deficit of 6%, and that translates to almost 100 billion worth of borrowings. And thus far, we've had no issues in terms with investors subscribing for our government debt. So there does not seem to be any immediate concern with investors. However, one constraint that the government has on the fiscal area is that by law, the government is not allowed to borrow to finance operating expenditure. That includes emoluments, subsidies, pension costs. And therefore, the government needs to manage its finances, especially operating expenditure, within the income it generates. And therefore, we're in the situation, particularly coming out of the crisis, where our revenue is obviously still affected by the dampened business environment. But at the same time, with it being a crisis, the demands for help to the rakyat, demands on business assistance, even higher subsidies due to global prices, requires us to have a one-off tax to bridge this gap. Hence, the advent of the Cukai Makmur. It's designed specifically to really tax those perhaps who are better able to afford the higher taxes, because it's only being incurred on companies which earn more than 100 million chargeable income. And that's only expected to affect a couple hundred companies at best.
Which is fair, I think. Don't you think so? I mean, it's not. I think it's justified, considering the situation, like you mentioned. We're coming out of this pandemic. Now, talking about tax, the Malaysian, can do with as much revenue as it can collect. This has led to suggestions that we should look into reintroducing the GST, which is a fairer tax regime, or deemed as a fairer tax regime. Is that something that the MOF is considering?
Okay. So as mentioned, the Cukai Makmur is there, as you're right, this is a one-off tax, and really to help us bridge this transition where we need to ensure that we have enough revenues to meet our commitments under operating expenditure. But certainly in the long run, we certainly want to ensure that we broaden our tax base and diversify our income sources. But Yang Berhormat Minister of Finance, I think, has clearly said in public that we're now focusing Budget 2022 on it being a recovery year. And certainly now is not the time to be introducing any broad-based taxes, because you don't want to do that now and dampen the momentum of recovery, the sentiment of consumers and also businesses. And so again, when you think about the sort of revenue measures that the government has introduced this year, the Cukai Makmur targets, a very small segment I mentioned of a couple hundred companies. The one where we have introduced a higher stamp duty on transaction of listed companies, again, that targets perhaps those with wealth while trading in the stock market. We've also taxed, for example, foreign source income. Again, that tends to be those large corporations with overseas subsidiaries. And so, again, what we've ensured is that in meeting our short-term needs for revenue, we've really tried to ensure that it is quite targeted, limited in scope in terms of who would be subject to that taxes. Now, as we are really focusing on supporting the growth momentum of recovery, we do not want any broad-based taxes at this time.
So that's for the short-term timeline. What about tax reforms for the longer term?
No, certainly that's on the agenda. The Ministry of Finance continues to review room to basically improve on our tax systems. There's ongoing work in terms of even trying to also better structure our tax incentives structure.
When do you think that will happen?
I think as part of what we mentioned in terms of fiscal reform, where we target that we will reduce the deficit to between 3 and 3.5% by 2025, and it's currently 6%.
Right.
You're only going to get there certainly by basically increasing revenues, and also obviously part of it also in terms of better rationalising our expenditure. So certainly that has to happen within the 12 Malaysia plan, within the next 5-year horizon in the medium term.
Thank you, Dato'. We're going to go for another quick commercial break now. We'll be back right after this breather. Don't go away. Thanks for staying with us on Money Matters. Dato', moving on, there have been arguments that though the 2022 budget is the largest ever, not much was provided for the middle class or M40 group, despite their position as taxpayers in the country. Some reports said that the trend continued focusing on providing cash aid for the B40 group. Do you think there's any truth to this statement? What's your take on this?
Thank you, Mohammed. I think it's an important question to address. I think partly it's a misconception. I think first, understandably, the government focuses on the lower income, the B40, recognising also during the crisis they were probably worse hit by the crisis. And so in the budget, we've set aside close to 10 billion, 8 billion in terms of Bantuan Keluarga Malaysia, helping about almost 9.5 million recipients, another 2 billion focused towards welfare, particularly for the poor. Now, it is not to say that the M40 has been forgotten. Part of the issue is you need to understand that the B40 are not taxpayers and therefore the government assists them through cash assistance. However, the M40 being taxpayers, the government have actually assisted them principally through many measures. Amongst them, the government has announced one, at least for real property gains tax, disposals after 6 years have been reduced from 5% to 0. In addition to that, we've also extended the sales tax exemption on cars for another 6 months. It's not too late, Mohammed, to buy a car. And in addition to that, on top of the various personal reliefs that the M40 and T20 taxpayers already deduct from their tax returns, in Budget 2022, we've had more than 5,000 worth of additional or enhanced tax reliefs. These include, for example, an extension on the lifestyle. So you can buy a computer that's about worth 2,500, domestic tourism another 1,000. There's also an increase in the upskilling personal relief of another 1,000. We've also extended for payments for kindergartens expenses of 3,000. And on top of that, there were some relaxations of some other reliefs. And so this certainly goes towards the pockets of M40. On top of that, to help the M40, we've extended also the reduction in the minimum EPF employee contribution to 9% for another 6 months. And on top of that, even gestures such as the discount on full settlement or partial settlement of PTPN loans, those really tend to benefit more the M40 group who have the reserves to do so. And so really, yes, you can look at the cash assistance of 10 billion to the B40, but certainly what I've just described in terms of the tax reliefs and also cash flow assistance certainly is also worth billions for the M40.
Right. So like the Prime Minister said, repeatedly that no one is left behind.
Certainly.
Okay. Now, tourism has been one of the hardest hit sectors following the pandemic. The industry is saying that the government is not doing enough to help as international borders are still closed. And even when it reopens by January 1st, travellers are still sort of cautious to travel. What are your views on this?
Certainly, tourism is a very important sector and is given due attention in the budget. We've got more than $1 billion worth of support, whether in terms of loan facilities and also some initial assistance to help tourism industry players kickstart again in terms of their businesses. But I think it's worth noting that one, there's certainly an element of pent-up demand. I mean, you've seen it yourself.
Yeah.
The moment the government allowed Malaysians to be able to cross state borders,
people are flocking to hotels,
exactly,
and tourism destinations.
And I'm sure if you're trying to book a hotel for the December year end, even without foreign tourists, they're largely
fully
full.
booked.
So I think that has assisted in terms of the recovery of the tourism sector, in terms of first being assisted by really the pent-up demand from the domestic sources, in terms of Malaysians wanting to really enjoy holidays at this moment. Looking towards next year, the government certainly has started the steps of, for example, we'll be starting the pilot for example, Langkawi for foreign tourists. We've also starting the VTL with Singapore to allow basically them to travel without the need for quarantine. And these are basically early steps to ensure that we reopen safely. I think what we just cannot afford, Mohammed, is to have another wave and spike in terms of cases which would necessitate another lockdown. So I think the government's approach under the National Recovery Plan is to open the economy in stages safely based on data and science. So I think this is a continued approach that the country needs to take. And we are confident that with the full reopening of the economy, Malaysians will prosper in 2022.
That's fair. Now, thank you very much. That's all the time we have with Dato Johan Mahmud Merican of the Finance Ministry. Thank you once again to Dato for taking the time and to be with us.
Thank you
this
for having
evening.
me, Mohammed.
Great. Now, before we wrap this episode, here's something on smart solutions for smart cities by Alam Flora Environmental Solutions. Let's take a listen.
Alam Flora, being in the waste management industry for over 25 years, is upping its ante beyond waste management via its wholly owned subsidiary, Alam Flora Environmental Solutions, AFES. AFES is all geared up to support the country's smart city agenda through its facility management arm via smart environment and smart living.
For now, few big players, also big oil and gas players, contacting us to become their partner for this kind of smart city development. So we are continue to develop our in-house expert to support this smart city program. Even though we don't have smart city, we are ready to provide to the client smart living and smart environment. Okay, we don't want to wait it become reality one day. We just do it now.
He further explained smart environment comprised green technology, waste to energy, disaster management system, and integrated waste management. While smart living is about community urban farming, safe city, smart grid, digital healthcare, and integrated CCTV. AFES also stood out among its competitors for having its own financial muscle to assist their clients in funding these sustainable solutions.
Some developer or some local authority or some corporation, they don't want to invest a lot for lump sum, so they can engage us. We have a capex to opex program. We will invest first, and then they can make an installment for maybe 5 years, 10 years. So they don't need to wait the solution that 5 years. Just engage us. We put all the solution now, and they pay monthly basis.
As part of Malakoff, AFES also has the advantage to leverage the independent water and power producers' capabilities in creating a smart grid solution for smart city developments, in which the company can provide holistic solutions and facilities to all be placed in one city. Among the solutions offered are building management solution, centralized monitoring management system, modern waste management, and urban farming.
The European country, they are very rich doing this business. At the same time, they make sure the environment is good. So this is very noble business for us. So we want to to create wave, to invite all other people in the world, in Malaysia. You must start thinking on sustainability. If you start thinking sustainability, thinking about AFES, because we want to be your partners. This is our strategy.
AFES also aimed to be the country's urban problem solver in areas of waste, energy, and green initiatives, be it for a city of today or smart city of the future. To know more, visit AFES's website at www.afes.com.my.
Now, that's all the time we have this week. Money Matters will be back next week, same day, same time. Until then, I'm Muhammad Ahmad Hamdan. Do take care, have a great weekend, and stay safe.
Anda positif COVID-19 tetapi tidak